The tax benefits of owning a business. Hey, my name is Sherman, the CPA, and today I'm going to help you save on taxes by fully explaining the tax benefits of entrepreneurship. So the tax law actually favors entrepreneurship, and in this video, you are going to learn why, how, and what you need to do in order to take full advantage of it. By the way, if you are thinking about starting a business or you already own one, comment below and let me know if you're taking advantage of the tax benefits that I share in this video. All right, so why does the tax law favor business owners? Why do business owners get tax breaks, tax deductions, tax loopholes, and so on? Why was the tax law written this way? Well, it can be summarized in one sentence. Businesses drive economic growth. Without businesses, you see, there would be no jobs. There would be no way to exchange goods, services, or money. There would be no stock market because stocks are really just shares of companies. So on the highest level, businesses allow for the circulation of money. And by the way, if money is not circulating and changing hands, that also means that Uncle Sam doesn't have any money to tax people on. So the transfer of money from one person to another person is generally taxed. And if there's no business environment for this exchange of goods to take place, then all of a sudden tax revenue goes down sharply. And without tax revenue, the government is also unable to function. Taxes directly fund government operations like the military and social programs like Medicaid, Social Security, and Medicare, and so on. And regardless of if you believe in big government or small government, you probably agree on some level that we need some type of government at a minimum. So in short, without businesses, there would be no circulation of money that people need in order to provide for themselves, their families, and society at large. And that is exactly why the tax law favors business owners. The government depends heavily on businesses to drive economic growth. And as a result, they provide tax breaks to them to incentivize them to create more business opportunities. So that's why the tax law favors business owners. Now let's talk about how, specifically how the tax law benefits business owners. So entrepreneurs receive tax breaks in the form of tax deductions, tax credits, tax deferrals, and several other ways. But let's start with the biggest tax break that entrepreneurs have over everyone else: tax deductions. So as you may know, the amount of tax you pay depends on your income. The more income you earn, the more tax you will typically pay on that income. But one of the major ways to pay less taxes on your income is by taking tax deductions. Tax deductions directly reduce the income you earn subject to taxation. And when it comes to businesses, they are actually able to take far more tax deductions than the average individual. For example, entrepreneurs can deduct their home office expenses if they work on their business at home. They can deduct their car expenses if they use their car for business travel. They can also deduct their vacation expenses if they conducted some business while on that vacation. They can even deduct the food they eat if they discuss business during those meals. Any ordinary person may incur these expenses at their place of employment, but for employees, these expenses would not be tax deductible. Whereas on the other hand, Section 162 of the tax law allows business owners to deduct all ordinary and necessary expenses incurred to operate their trade or business. So basically, entrepreneurs can deduct almost any expense as long as it meets this criteria. And entrepreneurs are not only able to deduct these expenses from their income and pay less taxes, but they also benefit from paying taxes at a later date. Allow me to explain. So generally, as an employee, you pay taxes before your paycheck is even deposited in your bank account. Your tax is withheld before you can even get your hands on your money. And then you have to use what is left to pay for all of your expenses. The opposite is the case for entrepreneurs. They receive all of their income before paying taxes and are able to use that money to grow their business and deduct the expenses they incurred to do so. And then finally, after paying all of their expenses, they only pay tax on what is left, not the total amount of income. Now, this provides two huge benefits to entrepreneurs. Number one, they have more access to capital today because they pay tax on their income after receiving it. And then number two, they pay less taxes as a result of taking tax deductions after receiving their income. Tax deductions alone make entrepreneurship extremely attractive from a tax perspective. And the beauty is that there are even more things you can do as an entrepreneur to reduce your taxes even more, like changing your business entity or deferring your business income inside of tax advantage accounts. So let's go ahead and talk a little bit about that. And by the way, if you want to learn my complete framework to reduce your taxes as a business owner, make sure you join our Tax Savers program at mycpacoach.com. All right, so let's talk about how entrepreneurs can avoid even more taxes by carefully choosing the best entity. So how a business organizes their entity will ultimately determine the types of taxes they will pay underneath that entity. Each taxable entity has different tax rules, allowing some entities to provide more tax savings than others. For example, the owners of corporations do not have to pay any self-employment tax on their income. And the owners of disregarded entities like LLCs, partnerships, or sole proprietors are not subject to double taxation, which C corporations are subject to. Not only that, but keep in mind that there are different types of corporations and LLCs with different tax rules and legal rules that you need to be aware of. For example, S corporations have different tax benefits than C corporations, and single member LLCs file their taxes much differently than multi-member LLCs. And by the way, we have tons of videos here on this channel that can help you pick the best entity for your business, so make sure that you are subscribed to the channel. And this is also one of the things we teach in our Tax Savers course as well. The next tax benefit of entrepreneurship are the tax deferred accounts that are available to them as a business owner. Business owners are able to contribute up to $60,000 in pre-tax income inside of tax deferred accounts like solo 401k plans or SEP IRA plans, which, by the way, is literally 10 times more than the $6,000 contribution limit that traditional IRAs offer ordinary individuals. And guess what? Business owners can set up both traditional IRA plans and self-employed retirement plans to take full advantage of the tax savings of both accounts. Plus, they will also benefit from their wealth compounding over the years inside of these tax advantage accounts. So if you are considering starting your own business, hopefully this video helps you understand the tax advantages you would have as an entrepreneur. And if you are already a business owner and don't feel like you're maximizing your tax savings, then make sure you sign up for my tax club, where you'll get access to my step-by-step course, monthly masterclasses, and live Q&A sessions with me. Thank you for watching, and I look forward to seeing you in the next episode.